we've come so unbelievably far, but it does feel like there is a little bit of a logjam at the moment. And I'm really hopeful and really optimistic that we as a country will get our act together and rally around this asset class, because it would be, in my opinion, as big as missing the internet if we don't regain control of, how crypto is going to unfold and evolve.
That was Michael Sonnenshein, CEO of Grayscale, the world's largest digital asset manager. We had him on the show this week to discuss Grayscale's current legal fight with the SEC over a spot Bitcoin ETF, and to get Michael's views on how important it is for a regulatory framework for the crypto industry, and really how that guidance will be key to unlocking the full potential of this industry and maintaining the United States leadership in this space. Enjoy. Welcome to What's at Stake, a Penta podcast. I'm your host this week, Bryan DeAngelis, a partner here at the Penta Group. And I'm joined today by a good friend and the CEO of Grayscale, Michael Sonnenshein. Michael, thanks for coming on this show.
Hey, Bryan, it's great to be here. Thanks for having me.
Of course. Michael, I think folks have heard a lot about Grayscale over the last few months, especially here in DC, and our listeners are certainly familiar with the company. But why don't we start with you? Can you just take us back, a little introduction, if you will? How did you get to Grayscale? What made you jump into this world to begin with?
It's been a trying 9 years, Bryan. I really came out of my undergraduate degree believing that I wanted to launch a career in traditional finance, and spent the first couple of years working at 3 bulge bracket investment banks. And it was later in my time there that I really felt that I was ready to do something a little bit more entrepreneurial. I'd like to have seen myself really have more of an impact on the business that I was a part of. So when I'd actually do something, I'd actually see and feel it at the company, or at the same time not do something and be held accountable for not doing it. And at the time, this is the winter of 2013, I realized that I should start a job search and start looking for more entrepreneurial opportunities, still within finance. And even though I was interviewing at hedge funds and family offices and all kinds of things, I had the fortunate opportunity to meet our founder, a gentleman named Barry Silbert, who had been really bitten by the Bitcoin bug. Sure. And through a brief conversation with Barry, he told me that Bitcoin was going to change the world. He was going to go and build an entire company or set of companies around digital currencies becoming a bona fide asset class. And Barry told me I should come help him build something, and that I wouldn't regret it. And I kind of took a leap of faith. At the time, I wasn't married, didn't have children, could take a little bit of a career risk, and felt that if it ever went sideways, I'd have a great story to tell at a cocktail party. But 9 years later, I've not lost faith once. I've never wavered in my commitment to Barry or, what we do, and certainly has not, never seen myself waver around the asset class itself. And Grayscale is now a $20 billion asset manager, the largest digital currency asset manager in the world. And 9 years into it, I kind of feel like we're only just getting started.
Yeah, that's great. And that last point of never wavering, I mean, that's, we're friends, but that's what I think of when I think of Grayscale, given the fight you guys have been in over the last couple of years. And our listeners are familiar with this. We had Craig, your chief legal officer, on earlier this year. He talked a little bit about what you all were trying to build with the Grayscale Bitcoin Trust, your focus on converting that into an ETF, and the case you were making with the SEC. That's when we started really working together to really, I would say, very vigorously and respectfully, but publicly make that case in Washington. And here we are now, end of October. Unfortunately, you're in a legal battle. with the SEC, but you guys have a strong case to make here. And I wonder if you can, in a sense, give us an update of where we are today following the SEC's kind of rejection of your application and where we're going to go from here.
Yeah, I mean, listen, Bryan, I want to just hone in on one thing you said. You said we're unfortunately in a legal battle, and unfortunate is the really appropriate word. It's unfortunate that this is the situation we find ourselves in, and much less about us and actually more about the nearly 1 million investors that this decision affects, right? For those of you who are less familiar with this case, or missed Bryan's sit down with Craig, we operate the world's largest Bitcoin fund, and the world's largest Bitcoin fund was conceived here in the United States and went on to raise billions and billions of dollars and became the conduit to how countless investors have actually gotten their Bitcoin exposure. Rather than buying Bitcoin directly, they've been able to get Bitcoin exposure through a traditional investment vehicle. And we started the Grayscale Bitcoin Trust in 2013 as a private vehicle. We moved it to the public markets in 2015. So it's been trading since 2015 under the symbol GBTC. We then made it an SEC reporting company in 2020, which was a huge step and really for us a collaborative effort with the SEC to really define what those rules of kind of disclosure and reporting should look like for a digital currency product. And we've really, as an organization, never wavered in our commitment to continuing to bring GBTC along this continuum to becoming an ETF. And it was last summer that the SEC rejected GBTC's conversion to an ETF. And they did so kind of consistent with all the other spot Bitcoin ETF rejections that they've made for other applications. But they've somehow continued to let Bitcoin futures-based ETFs continue to come into the market. We really were left with no choice other than to continue advocating for our investors by filing this lawsuit and contesting the SEC's decision here. So we are now a couple months into that lawsuit. We have a phenomenal legal team, both internally and externally. We have very recently filed our opening brief, which outlines a lot of the arguments that we're putting forward in front of the court that is, again, challenging this SEC decision. And then even just in the last week or so, the court has really been flooded by this outpouring of support from amicus briefs that have been filed by various entities, both in and outside of crypto and the traditional financial system, as well as former regulators. And now we're in a little bit of a holding pattern until the SEC responds with their brief as part of the case. And it's unfortunate, right? If we zoom out at the minutia of the case here for a second, Bryan, it's unfortunate that we're in a place where regulators are really squandering innovation. Not a day goes by where we're not seeing crypto businesses and technologies moving outside of the US because there's a lack of regulatory clarity and a lack of action on the part of regulators. On the other hand, we're seeing no shortage of enforcement actions, and I think as an industry, we're frustrated, right? We want regulatory clarity. We cannot continue to operate trying to avoid the mistakes of others. We'd rather be provided with a new framework that we can grow and create products and services and job growth and tax revenues and all the great things that we've seen other industries do here in the US. And we're at a pivotal moment. So, as we reach we're going to come up on the midterm elections in a couple of weeks. This is a hot topic. And not only that, but you now actually have bipartisan support around many of these issues with a couple of different bills sitting on the floor of Congress now. So that's kind of where we are. I would say my crystal ball says, even though 2022 has been a massive year on the crypto regulatory front, certainly our lawsuit will continue into 2023. Right. And the amount of regulatory conversation around crypto is only going to increase as we move into the new year as well.
Let me hone in on a few things you said there, because I mean, to state the obvious, you're not alone. I mean, I see this as a practitioner down here in DC, but lots of clients are in the same spot. I mean, 2021, 2022 have actually been years full of inconsistencies. And you talk about enforcement actions, but there's been a lot of just inaction from the SEC and others, in the sense of, I've never seen in my career an industry so eager to work with regulators to come up with clear guidelines, trying to engage, asking permission, doing things the right way. And I mean, we could spend hours on this, but we're seeing futures ETFs be approved and spot Bitcoin ETFs be rejected. We're seeing people be told, come in and talk to us, and then get slapped with enforcement actions. And it's just not only frustrating, as you mentioned, but it is sort of stifling this industry, causing a lot of problems. And I just don't, I think we're seeing it from everybody, in the sense that, I don't know who keeps the scorebooks on these things, but I think you all broke records in terms of comments with your application. The amicus briefs now are pouring in.
But we're like almost at an impasse, Bryan, and we shouldn't be, right? There's so much good that is being born out of the companies, the protocols, this entire, emergence of the digital economy. And, whereas if we would rewind the clock a couple months or a couple years from this conversation, you didn't have bipartisan support. You didn't have the financial services incumbents making investments, developing entire, business units and business plans devoted to this asset class. You didn't see, various regulatory regimes being requested by the White House to do, investigative work to develop white papers and strategies around how they were going to approach this asset class. I mean, we've come so unbelievably far, but it does feel like there is a little bit of a logjam at the moment. And I'm really hopeful and really optimistic that we as a country will get our act together and rally around this asset class, because it would be, in my opinion, as big as missing the internet if we don't regain control of, how crypto is going to unfold and evolve in the U.S.
Yeah, and we're going to see it done in other countries if we don't do it here. I'm curious, what is you mentioned a few things, the White House executive orders, speaking personally, gave me hope that, we had an administration that was going to take this industry and the innovations involved seriously. I've seen bipartisan legislation, which you usually don't see that happen once. We've got 2, 3, 4 bills moving through Congress. They may not move quickly, but you're seeing them move in a very bipartisan fashion. I mean, you sit at the head of the largest digital asset manager in the world. What is giving you, if anything, hope or some optimism right now for DC getting its act together in the future?
Well, I think the biggest piece of it, and I think if I zoom out, we've been an active participant in DC, let's say, for the last 5-6 years. What's giving me more optimism than ever is the level of engagement and the level of understanding that we are experiencing in our DC conversations. And it goes beyond, the House Financial Services Committee members and the Senate Banking Committee members. It goes into a lot of different areas of DC that are all seeing how the advent of crypto, the advent of blockchain technologies, how all of this is actually starting to unearth a lot of different industries, create efficiencies, create savings, you name it. And so the fact that we are able to be in DC and have the level of conversation and intelligent conversation was a huge gating item for a long time, right? At least now we're speaking the same language. All the Hill staffers are fully engaged on the issue. And I think that can only lead to actually not just having these bills float around in draft form, but ultimately that we can actually get some things done here.
Yeah.
And Brian, the two biggest things this industry is looking for is one, clarity on what constitutes a digital asset from, or a digital commodity from a digital security, because there are in fact assets that have been launched and are in circulation today that do qualify as securities, in which case, if they should be regulated by our securities regulator, the SEC. But there is no definitive guidance out there on how and why to draw that line of distinction. We are relying on, instead, at the moment, basically, I don't even know how old the test is, probably 70 plus years old, rules to try and attempt to draw that line in the sand.
This is the Howey test?
The Howey test,
yeah.
Yes.
Yeah.
So this is, a test that was conceived and has been relied on for decades now, that never would have ever thought about or conceived of the properties or attributes or features or use cases that we have around digital assets, digital commodities, digital securities. So we need new frameworks. So I think that's one piece of it. I think the other piece of it is also how and what we're going to see with respect to oversight of this industry as a whole. Yeah. I think typically when we've seen other technologies come along, that regulators have typically been happy to expand their mandate, kind of happy to expand their power, if you will, to have a greater level of oversight or a larger fiefdom. And here we're kind of seeing a tug of war over crypto between the SEC and the CFTC. Some folks are actually calling for the creation of an entirely new regulatory regime or a new regulatory agency to sit atop the crypto industry.
No small feat to pull.
Yeah, no, exactly. That can obviously just happen overnight. Someone just needs to snap their fingers, right? No, that's just not how these things are done. And in the absence of that, having one direct body to go to, which is certainly what we've seen in other jurisdictions around the world, it also creates confusion. It also creates a lot of inefficiency. So these sound like relatively basic things for us as an industry to be asking for. I would say the one thing that our industry doesn't have going for it that does make this tough for regulators is the fact that as an industry, what we're doing with crypto is continuing to evolve. Right. So what you're seeing crypto used for today is different than what it was yesterday and different than how it's going to be used on a go forward basis, because we're constantly unlocking new use cases and new features. And that can be scary and that can be difficult to wrap your arms around when trying to create rules. So there has to be collaboration between the industry and the regulatory community. And I'm confident we'll get there.
Yeah. Can I, forgive me, I'm going to put you on the spot for a minute there. I'm one that started geeking out on this a couple years ago and actually went back and watched the lectures from MIT professor Gary Gensler. And if you think about, whatever, the winter of 2020, the idea that someone was going to come into the SEC with that base of knowledge and understanding on this industry left me kind of optimistic that we would get this right. And I'm kind of baffled that, what's happened in the 2 years since and really how the CFTC and others who, I don't want to suggest they were learning this for the first time, but I think Gensler was probably one of the experts coming into DC on crypto. The CFTC has really kind of taken a much different approach of I'm going to work with the industry and we're going to figure out these roles. And that's what you're now seeing in Congress with this legislation.
Yeah, I mean, it's been disappointing to say the least. I would say that, the earlier years of Grayscale's time in DC was much more focused on education, meetings with various regulatory bodies in DC with standing room only meetings to try and help them understand the technology, understand the asset class, right? It
Right.
does and is in fact different than many of the other asset classes and technologies that they're responsible for regulating. And now that we were entering a period with Chairman Gensler coming in, somebody who is coming into that seat, to your point, with the knowledge that he had, there was a lot of optimism that he would be able to apply that knowledge to work collaboratively with the industry. But what we've continued to see is really nothing but enforcement actions. And just to be clear, Bryan, like, as an organization that has always positioned itself as, ask for permission, not for forgiveness, we support enforcement actions when they are calling out bad actors, bad people doing bad things, et cetera. But it has gone to such an extent that all of the efforts have been focused on enforcement actions. And we're just at this crossroads where it's kind of enough. We need actual regulation beyond just enforcement, right? Like I said before, we cannot, Grayscale, and we cannot, as other companies in this industry, operate or provide products and services or build towards our futures just trying to avoid the mistakes of others. We have to be able to build within some framework that actually accounts for what it is that we as businesses are doing and offering on a day-to-day basis.
And using some of the kind of existing infrastructure to provide those investor protections that folks need right now. I mean, the ETF is case in point on that front.
Sure.
Let me ask you, I did want to come back. You all released a survey earlier this week. You partnered with Harris. You were looking into, among other things, kind of where policymakers and or what people want to see out of policymakers in terms of regulation. Tell me a little bit, what did you find there that gives you hope maybe for the next Congress coming up here?
Sure. I think that we have long been believers that investor attitudes and just the general public's attitudes beyond even just the investment community have and will continue to shift when it comes to crypto. But we felt almost like an obligation, if you will, given kind of where we sit, to work with an organization like Harris to commission some research that would actually explore how attitudes have changed, particularly before we get to the midterm elections. So some of the things that we drilled into, we're certainly looking at political affiliations. So what was interesting to find is that even though we do see political division in the US, that both sides of the aisle feel that crypto does in fact represent the future of finance. I think it was more than half of our survey respondents felt that way. We also looked at things like regulation and how important that was to voters. Overwhelmingly, not surprisingly, they want the government to establish clearer rules for crypto. But what's been interesting is, and I think this is an area that crypto has long been the recipient of some level of scrutiny, is that it's really been an asset class reserved for younger demographics, and our survey results actually feel represent some other interesting data points, which really focuses on the fact that Americans feel that through crypto we can actually create a more equitable economy. Right? There's certainly no question that we are seeing divide within the country, particularly around folks feeling increasing inflationary pressure. So there's certainly the opportunity for crypto to create a more equitable economy. And we are seeing greater adoption with older demographics as well, not just younger demographics like crypto has long been believed to be. And I think finally, I think one of the other big takeaways is really thinking about from an investment perspective that crypto is here to stay, right? They view crypto as being a part of building a diversified investment portfolio. And that's not always been the case, right? We've definitely seen investor attitudes been a lot more shy or perhaps kind of pessimistic about the staying power of this asset class. So to have about half of survey respondents, talk about crypto being a part of portfolio construction really does speak to how that narrative has shifted, and that there really is this feeling and this widely held belief that as an asset class, it's here to stay.
Yeah, I think that third point is especially important here in Washington. There's, even in the last 12 months, so much skepticism that this was a lasting financial product or investment tool. And anecdotally, I've seen that shift even around the office of people who were skeptical when our first crypto clients walked in the door 2-3 years ago to now seeing the benefit and the value and the longevity of it. Let me ask a couple. I'll wrap up with a couple questions. We are in a so-called crypto winter. To that point, do you think, in a way, maybe taking some of the buzz and excitement that we saw a year ago when crypto values were just going kind of through the roof, and a lot of Super Bowl ads, a lot of consumer kind of excitement in public. Do you think, in a way, that's helped attitudes as people have taken this time to really understand the technology behind it, the lasting power it involves?
Certainly. And I wish I could tell you, Bryan, and any of you listening, that this will be the last crypto winter. It won't be, right? Grayscale has been through crypto winters before. We're weathering through this crypto winter, and we'll weather through others to come. We use these times to really focus on infrastructure, and I think many crypto businesses do as well. This is a time to build. This is a time to think about process. This is a time to think strategically. We do see these cycles where crypto prices go on to take out new all-time highs and ultimately find that moment of correction, and do sell off sometimes precipitously. I think we've seen maybe 5-6 times in Bitcoin's history alone where it corrected by greater than 50, 60%. And it goes on to kind of find this new base for a period of time before, continuing to go on to its next cycle. So we are certainly in a crypto winter, a time of sustained lower prices. But, we also don't think that doesn't mean that just because we're in a crypto winter, and certainly investor behavior has not told this to the Grayscale team, that folks are shying away from the asset class, right? Quite the opposite. There's actually opportunity to be had in times like these.
Can you tell me what is Grayscale doing to build during these months? I know you guys have a new partnership with one of your, I guess I would call it a sister company, Foundry. What is some of the work you're doing during this quote unquote winter?
Well, we've always really rooted our efforts in expanding access to the asset class, and that really speaks for the breadth and depth of the Grayscale product lineup, both on the digital currency side as well as equity ETFs. I think what we've been doing now to continue to support that is really thinking about lowering the barrier to other aspects of the crypto ecosystem. And so recently that's focused on infrastructure. And when we say infrastructure in crypto, what we really mean is things like mining and staking, and really the processes that underpin and secure the networks that these coins reside on, and ultimately that process these networks and give the tokens on these networks value. So as you mentioned, one of our sister firms is a company called Foundry, another business born here in the United States, conceived of in the United States, continued to grow its footprint. And Foundry has actually emerged now as the largest Bitcoin mining pool in the world. And their efforts are really focused on North America. So they've been a huge proponent and propellant, for that matter, of shifting a lot of the perception around mining concentration and having a lot of it move back into North America. And so thinking through some synergies between what Grayscale brings from an investment management perspective, what Foundry brings from a mining perspective, we decided to create an offering so that folks could actually access infrastructure. So we just launched a new offering. It's called Grayscale Digital Infrastructure Opportunities, GDIO. And so GDIO is an operating company. It allows investors to deploy capital into the operating company, which then gets put to work by buying Bitcoin mining equipment. It mines Bitcoin through the Foundry pool, the largest, largest pool in the world.
Right.
It programmatically sells Bitcoin that it mines for US dollars and then distributes out that cash to investors. And this is exciting on a bunch of levels. One, it's an exciting synergy between Grayscale and Foundry. Two, we've never really seen other asset managers or any product creators for that matter lower that barrier to infrastructure before. And as investors are speaking to us about how they're thinking about the crypto winter, they really like the idea of marrying, of kind of complementing the crypto exposure that they have through Grayscale products or owning coins
Right.
with having that infrastructure component as a part of their crypto portfolio. So there are, in fact, lots of interesting opportunities to build and gain new exposures, even though prices are in a more lower and sustained lower environment.
Yeah. Yeah. But you guys are, like you said, smart to invest now and build now. And while I think we probably have to wrap it up here, this is certainly not the last we'll hear from Grayscale, and you all continue to be a leading voice in DC. So I know many of our listeners will be watching the legal battle with the SEC and a lot of your other work very closely. But Michael, I want to thank you for coming on. I really appreciate it and really enjoyed the conversation.
As did I. Appreciate you having me and look forward to talking again soon.
Sounds good. Thanks, Michael.